governments would love if the world went to CBDCs. There was a big announcement this morning that Apollo and a bunch of others are doing this thing to help with the asset management business with JP Morgan and Avalanche. And okay, great, but that's a private chain. JP Morgan would love you to use a private chain. CBDCs, the reason I don't mention CBDCs is I think they're pure evil. I think they're one of the most heinous things you can imagine. Imagine that the guy in charge of the BLS, I'm sure you've seen Augustin, he's a kind of scary guy. And he says, of course, we should control how you spend your money, when you spend your money, if you be allowed to spend your money. Programmable money that a government can control is a very scary thing. Open and free markets are less scary to me. So I like stable coins. I like digital assets. I love Bitcoin.
You might like it, but given that it's so scary, isn't it also inevitable?
Well, sure. And I do think that fiat isn't going away overnight. Now, it will eventually go away. I mean, we've had one money for 5,000 years. Money is an asset that exists in the absence of a liability. That's gold. Stablecoins are here to stay. We are going to move to a digital world, whether the incumbents, financial services companies like it or not. Name a technology that came along that got critical mass that went away, right? Horse and buggy manufacturers didn't really like the automobile. The train companies don't really like airplanes. But I didn't take a horse and buggy or a train yesterday when I flew to New York. I flew in an airplane. So this isn't as inevitable as the internet. Phone companies didn't like the internet. They tried to pass laws to make it illegal. Imagine that. And Al Gore killed that bill. So he didn't invent the internet, but he certainly helped it. And look, stablecoins are a great way of transferring value quickly, efficiently, and without worrying about market price. And I don't know if you've ever thought about this. I think about it from time to time. Banks are closed more hours than they're open. The markets are closed more hours than they're open. And digital assets never sleep. I could transfer you USDC right now if I wanted to, if I could get to my phone, but I'm using my phone since I forgot my computer today. I don't know. It's a long-winded way of saying I don't think stablecoins are the real reason we're seeing some pretty meaningful pumps in a number of coins. I think it's momentum. It's the halving cycle. It's the ETF, which, BlackRock will get approved. Which day, I can't tell you exactly, but they're going to get approved. Whether anyone else does, I hope so, since I own pieces of two of the companies that are ahead of them in line. But I'm doubtful that they will get approval. I think BlackRock will get it. And I think that's going to bring tens, probably hundreds of billions of dollars into Bitcoin. And some of that's going to flow down into other coins. Take Bitcoin. It's digital gold. It's equally scarce. Stock to flow ratio is fantastic. And it's more divisible and more portable. So I believe it will replace gold as the base layer of money. All money sits on top of gold. Central banks own gold. They issue debt, issue currency on top of that. That's the way the world works. I think Bitcoin replaces that. Fiat's not going to go down without a fight. And to your point, they're going to try to digitize it and make it centralized. But centralized is the opposite of what we all want, which is decentralized. And we will live in a decentralized world in the future. It's just going to take a while.
Against a Bitcoin ETF is, the SEC is worried about fraud and manipulation. And granted, Bitcoin is not the same as XRP. When we saw that prank where there was an application, quote, fake one, filed on behalf of BlackRock, it was not true for an ETF that tracks XRP. And we saw XRP move 10%. How do you think about that? Because I understand it's not as deep of a market, but this shows that it's so easily manipulated.
You see those types of misinformations, not just in crypto, but across all types of asset classes, okay? And a simple tweet can, send stocks moving in one direction or another. We see it all the time. I think it's a really strong reminder as you are navigating the investment landscape, who you invest with, right? A lot of folks are thinking about differentiation, competition in the market. We're a company that holds ourselves out to be a crypto expert. We've been doing this for 10 years. We're operationally ready to operate GBTC as an ETF. And so as you're thinking about where you want to go for that exposure, who you do it with is really going to matter.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, make sure you're joining the Patreon. If you're not a part of the Patrons, make sure you're hitting the Cash App. Now we have Mark Yusko says that CBDCs are definitely coming. They're inevitable, but they are evil. And we know programmable money. They'll have the power to tell you what, where, and when, how to buy, and you have 3 to 6 months to spend it or poof, it's gone. And he stated the same thing about stable coins. They're not going anywhere. But he says that stable coins are not the reason why we're getting a pump. But guys, we know that's how the Fed pumps crypto, is through the stable coins. And when it comes to Bitcoin and Ethereum spot ETFs, nothing has happened yet. That's the reason why we're just pumping off of news. And Mark goes back to the narrative that Bitcoin is digital gold. And who is it digital gold for, guys? That's right, the robots, algorithms, and drones. And remember, the Crypto Teacher told
this moment. How do you build a portfolio around it? Well, I think you look for companies that were ready for deflation. Costco, for example, has monitored price levels, and it's amazing CFO Richard Galanti not only told you to expect deflation, the company itself was even pushing deflation along by demanding lower prices from its suppliers, or making its own branded stuff and selling it through the suppliers. Or you
moving down this morning, despite these slight beats on the top and the bottom lines, the retailer does issue this cautious outlook for the consumer. CEO Doug McMillon also told investors on today's call he expects deflation in the coming year, but that it will actually benefit customers.
Units picking up as prices settle in.
True.
So that's problematic. And then the last piece is you're seeing a ton of deflation. Most of what you buy around the holidays and for Christmas is brought over on a boat. And with ocean freight rates coming way down and demand coming down, you're seeing massive disinflation in goods, appliances, furniture.
The poor have a chance and the wealthy still do very well. Because what happens, the poor have a ladder up, the middle class and the wealthy still do well. Folks, we're already seeing the results. The last quarter, the American economy grew 4.9%, the highest growth rate in 2 years. More people in the United States because many of you sitting there, the CEOs, let's give credit where it's due. More people in the United States are in the workforce today than any time in American history. Our unemployment has been under 4% for 21 straight months. Inflation has come down by 65%, more to do. We now have the lowest inflation rate of any advanced economy in the world. Meanwhile, median household wealth has grown by 37% in real terms since before the pandemic. I acknowledge there's a disconnect between the numbers and how people feel about their place in the world right now. We can deal with the second part as well. We still have work to do, but our model for growing is delivering real results for all Americans. Significant Black unemployment, Latino unemployment, etc. The strength of our economy is driving growth and spurring investment throughout our region. And again, because many of you sitting in front of me made those judgments. When we offered to host APEC 2 years ago, we committed to modernizing this institution to make it easier for us to work together as we take on the challenges of a new era, and there are many challenges. We're going to see more changes in the next 10 years than we've seen in the last 50 years.
Last night, Eamon.
It was fascinating, Tyler. I mean, I was in the room as Xi Jinping was honored by America's best and brightest CEOs. I mean, some of the biggest names in finance. Larry Fink was there, Tim Cook was there from Apple, Albert Bourla from Pfizer. I mean, just an incredible list of CEOs and executives there at this dinner honoring Xi Jinping last night. And she spoke for about half an hour, I would say, to the room and made some very friendly remarks. Didn't really speak specifically to the business community, more broadly to America and his, as he called it, his friends in the United States.
Did they tell you to tone down some of your social media
posts? Do I look like I'm toned down? I've been very clear about Fukushima, that China continues to fish in Japan's water, even though they're banning that fish in clear violation of trade agreements. I mean, to me, the big point here, and I think that the most important point is, nobody's under any illusion. I thought what was very interesting in the meeting is after the meeting, President Xi decided to have a dinner with a bunch of American CEOs who gave him a standing ovation. I was with President Biden last night where he had a reception, and there were world leaders from the entire region. A number of country heads of states. Prime Minister Kishida was there, as was President Marcos of the Philippines was there. And I think that is a telling sign to split screen. President Xi is desperate for American investment because he has made a series of economic decisions and political decisions, arresting people where capital is fleeing. The coin of the realm for the United States, we have allies, we have friends, and they want to be aligned with us. The fact that there were foreign leaders with the president here at the APEC conference and American business CEOs who literally have their R&D, their intellectual property, stolen from them, has decided to give President Xi a standing ovation.
And the first pillar, which to me is the most important, is about the possibility for the consumers to buy our handmade products online. Not many people know that we started this partnership back in 2018 by having a showroom experience. And we are very pleased with the evolution. So we decided to be able to go through the end-to-end experience. So basically, the consumer can get into the Amazon environment. They can choose the vehicle they would like to shop. They can choose the configuration, the color, and actually the dealer they would like to buy from. And they can check also, obviously, the price, the incentive, and everything else. They can also finance the vehicle online, and even when the program is fully developed, they'll be able to trade in their current vehicle or even buy a CPO. So we announced this program today. We're going to start a pilot phase the first quarter of 2024, and we will deploy it through the entire portfolio starting in the second half of 2020. The second pillar is about the integration of Alexa in our vehicles starting 2025. This is also a fantastic news for our consumers that they already know how Alexa works and will be able to connect from their car wireless voice recognition system with their smartphone or with their homes.
And now we're hearing the corporations and mainstream media talking about deflation. And I warned you a long time ago. Then we had Kathy Woods talk about deflation. And the inflation that we have right now is all about corporate greed. And inflation is calling consumers to get what they need and not what they want. And guys, it's going to get worse and worse over the next 2 years. We're going to have mass layoffs. That's the reason why I released a short video this morning. Educate your friends and family, because deflation is going to seep in the economy. I don't care whether it's homes, cars, any type of goods. Remember, all this automation is going to bring in hyper-deflation. And remember, it's part of a plan. Yes, it takes time, but we're going to start seeing it speed up as the consumer gets weaker. We can clearly see, guys, we're not in a recession. We're in a Great Depression. And we had Biden, just like the Fed, say how good the economy is. But guys, we know Americans know better. And Biden stated we're going to see more change in the next 10 years than we've seen in the last 50. And what is he talking about, guys? That's right, the fourth industrial revolution. And the video I released this morning, I have Klaus and Biden talking about the fourth industrial revolution
and hollowing out the middle class. I let you hear it from the horse's mouth. And remember, the crypto teacher told you. And we had G with all the big corporations sitting at his table because they know that China is about to rise and America to Babylon is about to fall. You're talking about 1.3 billion people, and hundreds of millions of them are coming out of the middle class. So we know our U.S. corporations want a piece. And we have Rahm Emanuel playing the Hegelian dialectic. We've seen this movie before. And we have Hyundai and Amazon pushing the fourth industrial revolution. You'll be able to buy a car on Amazon, the one-stop shop. And then also the car will have Alexa in it. Now, guys, you add in these social media platforms. We know they want to be a one-stop shop. Then, of course, you'll have your insurance, your financing inside that app. Your digital ID will already be there, so they'll know whether you're qualified or not. And then you add in the smart contract to finish the deal. And eventually this will come to housing. And guys, there won't be a human involved. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
We're going to see more changes in the next 10 years than we've seen in the last 50 years.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner